All right, welcome to our explainer. Today, we're going to demystify a journey that every single person who earns money in India has to take, the tax journey. I know, it can feel like a total maze, but don't worry. In the next few minutes, we're going to give you the map. Let's get right into it.
So, have you ever stopped to think about it? Every single rupee you earn, it actually goes on a journey. It starts with you, of course, but it has to pass through a whole series of rules and checkpoints. We're going to trace that exact path from beginning to end so you can navigate it like a pro.
So here's the game plan, our roadmap for this journey. It's got 4 main stages. First, we'll figure out where your income is coming from. Then, we'll calculate the total. After that, we'll look at the smart ways to lower that total with deductions. And finally, we'll cross the finish line by filing everything properly.
Okay, let's dive right into step 1, identifying your income. You know, the Indian tax system is actually super organized. It starts by sorting every rupee you could possibly earn into one of 5 main buckets. The official term is heads of income. You see, pretty much the entire tax system is built on these 5 categories. It doesn't matter how you earn money, it's gotta fit into one of these buckets. So let's get into what they are one by one.
Okay, first up, and this is the big one for most people, salaries. And this isn't just your take-home pay. It's the whole shebang. Your basic salary, any bonuses you get, and even things called perquisites, which is honestly just a fancy term for perks like a company car or a place to live.
All right, next up, we've got income from house property. And yeah, it's pretty much exactly what it sounds like. If you own a property, a house, an apartment, whatever, and you're earning rent from it, that rental income gets its own special bucket. And number 3, that's your income from a business or profession. This one's for all the entrepreneurs out there running their own show, for the freelancers and for professionals like doctors, lawyers, or consultants who earn from their practice.
Now, this next one is a big deal, capital gains. This is all about the profit you make when you sell a major asset. You know, like selling stocks for more than you bought them for, or maybe selling a piece of property. But here's the thing, not all these profits are treated the same way.
And this is where it gets really interesting, because there's a crucial detail here. The tax you pay depends completely on how long you owned the asset. If you sell it pretty quickly, it's a short-term capital gain. But if you hold on to it for longer, it becomes long-term. And that often unlocks some really nice tax benefits, like indexation. It's basically a cool trick that lets you adjust your original purchase price for inflation. What does that mean for you? A smaller taxable profit. Pretty neat, right? And that brings us to our final bucket, number 5, income from other sources. Think of this as the ultimate catch-all drawer. The interest you earn from your savings account, dividends you get from stocks, and, yep, believe it or not, even that lottery jackpot you've been dreaming of. It all lands right in here. Okay, so we've sorted all our money into those 5 buckets. What's next? We're on to step 2 of our journey. This is where we start putting all the pieces together to figure out what you might owe. So the first thing we do is calculate something called your gross total income. All that means is we add up everything from those 5 buckets we just talked about. Just think of this as the big, raw number, the starting line, before we make any smart moves to reduce it. Now, things can get a little more complex here, and I'm not going to go into the weeds, but you should know there are rules for things like clubbing income, where someone else's income might get added to yours, or setting off losses, where a loss from, say, your business could be used to reduce a gain somewhere else. It's good to know they exist.
All right, and this brings us to what might be the best part of the whole journey. Step 3, deductions. If your gross total income is the starting point, think of deductions as your smart, totally legal detours that help you shrink your final tax bill. This is where you can really take control.
You know, these deductions, which you'll find in a part of the tax law called Chapter VIA, are basically the government's way of giving you a high five for being responsible. The system rewards you for doing smart things, like saving for retirement under 80C, getting health insurance under 80D, or paying off an education loan with 80E.
Okay, deep breath. We've identified our income, we've added it all up, and we've cleverly used deductions to lower it. Now for the final leg of the journey, crossing that compliance finish line. This is all about paying what you owe and, just as importantly, telling the government that you've done it. You see, you don't just pay your tax in one big chunk at the end of the year. For most of us with a salary, it's cut automatically every month. That's TDS, or tax deducted at source. If you have a lot of other income, you might pay advance tax in chunks during the year. And if there's any little bit left over, that's called self-assessment tax. And finally, the last absolutely critical piece of this entire puzzle, you have to file your income tax return, or ITR. This is your official statement to the tax department. It summarizes everything, your income, your deductions, the tax you paid. Hitting that submit button before the deadline is what completes your tax journey for the year.
So, after all that, what are the big takeaways? Let's boil it down to 3 key things. First, get to know your 5 income buckets. Know where your money fits. Second, use those deductions. Things like ADC and ADD are there for you to use, so take advantage of them. And third, and this is non-negotiable, always pay your dues and file on time. It's the key to keeping things simple and stress-free.
And that's our map of the tax journey. We've walked you through the whole path. So the question I want to leave you with is this. Now that you have the map, what's one turn you're going to take differently on your next tax journey? Maybe you'll look into a new deduction or just get a bit more organized. Whatever it is, you're now better equipped to navigate it. Thanks for joining us.